Hello, everyone, and welcome. I'm super excited to have you here, and thank you for taking the time to join us on this webinar from Ready to Resilience and Ready to secure and apply for that financing that your business should always be ready for, so you can take advantage of opportunities for growth, expansion, hiring. And today I'm so happy to be joined by Bradley Worksman from National Business Capital. National Business Capital helps small businesses like yours secure access capital, different capital solutions that they can match you with depending on the needs that your business is experiencing or the stage of your business. And Bradley will walk us through what his organization can do for your business in the area of financing and some of the products that your company may have access to. And he will cover the second part of this content. I am happy to be back with this webinar series, which is going to focus on loan readiness for small businesses. As we all know, access to capital is critical to the success and resilience of our businesses. And in today's environment, even more critical that businesses and business owners are ready to apply for financing and to show that their businesses have a good story to tell or that are ready to shift that story. Access to capital has been critical in times of economic downturn. Recently, a few years ago, it seems like yesterday, we experienced something where businesses had to pivot quickly, had to shift, had to go from storefront businesses to online businesses, and access to capital made that possible for a lot of them. We had programs that were made available by the government, but there were other programs that other banks and traditional lenders were making available that a lot of businesses didn't have access to because they were not ready. And I can say that because as an accounting firm, we saw a high demand of services that were helping clients get ready for the loan application. And today, more than ever, that preparedness is so critical because lenders are more selective in the way they lend and select their clients, and also interest and terms can be a little less favorable if we are not ready. Again, my name is Ramona Cedeño, and for those of you, I'm a CPA, I'm a financial planner, I'm a financial strategist. I love everything numbers and finance, and we really enjoy as a firm helping our clients go from revenues of $500,000 to $1 million to $5 million. Some are already at that level and just want to expand and scale. And we help our businesses not only by providing the traditional bookkeeping and tax compliance services, which are the foundation of being ready for the next phase of your business. We also help them with tax advisory, planning to optimize or minimize taxes, and also with fractional CFO services, which focus a lot of times on being loan ready, being ready to fundraise, can be equity capital, and also in some cases preparing for an exit. All of these phases that your business is experiences rely on good financial practices, good financial systems, and understanding your financial story or the financial story of your business. And that's what we enjoy helping our clients with. In today's agenda, we're going to be talking about the capital landscape and what it means to be loan ready. We're going to talk about some strategies that are available through NBC, and we're going to go through some real life examples of businesses that were successful by getting access to capital. And we'll have time for Q&A. We have a special offer at the end, totally free. I promise, no catch. You have a freebie at the end that we want to share with our participants. Of course, I cannot start this webinar without sharing some numbers. So I have two statistics here that I wanted to share with all of you. The first one is the impact of lack of capital on small businesses. According to a US bank study, 82% of small businesses fail because of poor cash flow management or poor understanding of cash flow. Within that, of course, falls the lack of access to capital. Poor cash flow management reflects in many areas of your business. The way you build your clients, the way you collect from your clients, the terms of that you have with your client contracts, and how ready you are to access capital. The second statistic we have here is that only 1 out of 3 small businesses that apply for financing are approved. And a lot of times this has to do with a poor financial story. Those businesses have not managed finances properly, have not managed cash properly. And when they go to access capital, they're not ready and they're not attractive to a lender. We want to change that statistic. Of course, we want to see that 3 out of 3 businesses get approved for their loans. But if we can get it to 2 out of 3, that's already a double. And we want you to be in the bucket that's getting approved. So hopefully with today's content will help you get closer to that, achieving that. Let's talk about the capital landscape. Let's begin with this. Inflation, interest rate, lending trends. You hear the news. And let's not talk about taxes today, but that's a whole different topic that I also enjoy talking about. Inflation continues to be a big factor on the cost of borrowing. Interest rates are directly impacted by how the inflation is trending, but also there are many other factors that the economy incorporates into the interest rate market. And this impacts the availability to access cash or financing. It impacts how the lenders view their borrowers. And as lenders become more selective, what happens is that if you are a business that's attractive to a lender, your terms and your interest rate, the cost of borrowing is going to be lower for you or for your business than the companies that are not ready, that are don't have a good story to tell, that don't have good financial management practices, that don't show that they are a proactive leadership company, but rather a reactive. And it's critical that as we navigate this evolving borrowing, lending, capital landscape, we are aware of what the trends are in this space so that we can navigate them and also prepare our businesses to compete with those businesses that have access to capital and better terms. Financial clarity and the timing of when you borrow and when you apply for the funding is going to be, I would say, the most determining factor in getting access to capital. If we don't know where our business has been, how our business has done, and where it's going, and what capital can do for our business, if we don't know that ourselves, if we cannot see that on paper, how can we tell that story to a lender? How can a lender trust us to repay the debt that we're asking for? And how can they trust us to give us the best rates, the best terms, when there are other businesses that might be ahead of the game? So again, understanding where the industry is trending, what's going on with the interest rates, what additional costs might be out there, and how we can negotiate, position ourselves to get the better terms is going to be critical in making those decisions to borrow. I see a lot of times clients say to me, I don't want to borrow because it's so expensive, or I'm afraid that I'm not going to be able to I'm not going to have the discipline to repay it. They view debt as a bad thing, as a negative, as the enemy, but really debt is not the problem. It's not borrowing that's the problem. It's how we manage it and what kind of terms we get from our lenders when we're borrowing. And that's why we have Bradley here today, who is going to walk us through that in the next few minutes to tell us the different products and options that we have available and how to access them in the best possible way. Let's talk about the loan ready mindset. I'm loan ready at all times. I love being able to apply for a loan and being told yes, right? But I can say that because I've lived this for the last 20 years. I know what it means not to have access to a loan, and then how to fix that and how to stay on that path of having access to a loan, having access to a credit card, a mortgage, a car loan. When it comes to our business, this is even more critical. It might not having access to capital can make the difference between being able to retain your staff or having to let them go. It makes a difference between when it comes to securing a contract that has a 60-day payment term, because a lot of large corporations and government organizations are not paying us within 15 days. They want to pay within, in 60 days, not 15, 60. So when we have those opportunities to secure a large contract that requires us to upfront the costs, access to a line of credit, or having that good relationship with your bank or an alternative lender who can front you the funds to support that contract, makes a huge difference. It takes away the desperation, the panic, the possibility of not being able to say yes to the contract. It might sound simple. Yes, I'm going to, I got a contract with the Department of Education and it's a $1 million contract. Now what? I need to hire. I need to get software potentially. I need to get insurance. There's so much that you need to do when you get that opportunity. And being ready all the time for those opportunities by knowing that you can access capital anytime you need it just puts you in control. It makes you feel free to say yes to those opportunities, and it takes away the overwhelm and the panic from the day to day. You have better things to worry about than to have to worry about scrambling to get your financials ready, to get your tax returns up to date, to have a cash flow forecast ready to show to your lender. So let's live in that mode on a daily basis. Let's live on that with our businesses. Let's be always loan ready, capital ready, exit ready. I love that. Like I always tell my clients, imagine if you wanted to start your business tomorrow. Like, what does that look like, right, for you? And everything has the same foundation. Again, it's about the leadership, the financial practices, how you manage cash flow, how you manage your customers. You make up of recurring revenue versus one-off projects, your collections process, your terms with your clients, having those tax returns filed, in compliance with the regulations. All of that puts you in control. What are lenders looking for today? They look for a lot, they ask for a lot, I know, but at a minimum, we want to see us as an accounting firm and fractional CFO advisor. We're going to go the traditional route to get you ready to apply for a loan. We're going to say, we need to organize your P&L, your profit and loss, your balance sheet, if you don't have them. If you have them already, we want to get ahead of that underwriter. We want to review your income statement and your balance sheet and identify red flags. If I look at your P&L today and you give me a P&L for the last 6 months, we are in July, you bring your P&L from January through June, and I look at your cost of goods sold compared to revenue, and your cost of goods sold are 80% of revenue. 80%, that means your gross margin is 20%. And I compare that to industry benchmarks, same industry, and the industry says that the margins should be 50%. What does that tell me? Immediately, I can make a lot of assumptions. I can say you are not managing the cost of goods properly. And there's no judgment here. I'm using you a lot, but it's just to use as an example. There is no judgment here. There is a lot that we don't do properly throughout our journey as entrepreneurs and business owners, and I have made my share of mistakes too. Not in finance, okay? I won't say that. Not in the finance area, but hiring or managing client relationships. So there is no judgment here. So, but if you show that your gross margin is 20% and the industry says it's 50%, immediately I'm going to start asking, are your costs properly allocated in that P&L? Is that 80% really your cost of goods sold? Or do you have something in there that is not cost of goods, it's overhead? Or if that's truly cost of goods sold, are you overpaying for your goods, for your inventory, for your services? Why do we have a gross margin of 20% when the industry average is 50%? On the balance sheet side, I look for things that don't seem to look appropriate. Like if you have accounts receivables of $1 million, but your sales for the year is only 200,000. How do we have receivables are $1 million? And maybe it is true that someone, the bulk of your clients owe you $1 million. Why are your AR, your accounts receivables, so behind in collections? What is your process to build, to collect, to manage your relationship with your clients so that they pay you more timely? So we're looking at those things. The banks are also, or the lenders are also going to be looking at the nature of your cash flow and the trend, the how your cash flow moves in and out of your financials. For example, if you have a lot of fluctuation in the cash flow, is it because your business is seasonal or because you rush to collect in January and then you forget, you kind of let it go, and February and March you are busy with other things, maybe preparing for tax season, and you're not paying attention to your clients' collections or your clients' accounts receivable? Is your cash flow coming from, or your cash coming from recurring clients? Is it steady month over month? Do you have enough cash coming in to cover your expenses and the debt that you will incur? I hear this too. Sometimes clients say, well, the banks want me to have cash in order to give me cash. And if I had cash, I wouldn't be asking for it. But that's because we're applying for that loan when we ran out of cash. If you apply, talking about proactiveness and preparedness, if you apply for a loan before you need it, your bank account is not going to be in the red. And that's a very good sign that you are managing your business with leadership, with the right leadership. Banks also once, and I keep repeating saying banks, but in today's environment, we have a lot of alternative lenders, fintech, non-traditional lenders. We have SBA lending, and I'll let Bradley speak about this. Not I'll let, he will talk to you about all of this because he has a lot of expertise in that space. But lenders are looking also for a well-defined purpose for your funds. I'm sure if I go to a bank or a lender and I say, I want to borrow through my business to put a down payment on my home, I don't know how they're going to look at me, but I'm sure they're not going to just say yes. And if I say I'm going to borrow to go on vacation next year, I want to go back to Italy and I want to borrow $50,000 and I'm going to use 20 of that for my next vacation, I don't think that's a good use of any bank's funds when they're lending it to your business. There are other loans for that and other credit cards that, so that's a different webinar. When it comes to your business, the use of your funds, banks want to see that you're going to put that money to work. Even if you say, I'm going to take this loan to pay off my high interest credit card balances, that in some cases it's fundable and lenders will restructure your debt to repay that. But the ideal story is I manage debt well. I am borrowing because I have this business plan for how I'm going to use the funds. It's working capital because there is a delay in my receivables in relationship to my accounts payables, or I'm launching a new product, or I'm getting this nice contract with this company and I need some working capital to support. Lenders will also look at your revenue profile and your industry, how the industry is doing, and there are products for different industries. If they're more riskier, there are industries that are kind of risky or sensitive, there might be products for those. But in general, most traditional businesses are going to have some options for financing. And then there is the debt service coverage ratio, which maybe Bradley will cover, but this is, you do want to see that you have the ability to repay the loan, right? And that's when clients will say, they want me to have money to give me money. Yes, we need to show that we can pay back the loan. Because what we're going to do is we're going to take that loan, we're going to spend the money, and then how do we pay it back if we're not making enough to pay it back? So now I'm going to let Bradley take over, and he's going to go over what he does at NBC and what NBC can do for your business. And then we'll come back and share some real life stories and talk about some of the how we support this process with NBC. Bradley, I'm going to pass it on to you.
Absolutely. Thank you, Ramona. Appreciate you having me on today. And thank you, everybody, for jumping on. Hope everyone's having a great summer and staying cool out there. So I'm Bradley Worksman. I've been with the company with National Business Capital for over 10 years. National Business Capital, we've been in business for 17 years. We've funded over 30,000 transactions, close to $3 billion of financing provided to small and medium-sized businesses, mainly for, like Ramona said, whether it's expansion to buy and flip inventory, marketing, scale your business, or sometimes businesses just come across cash flow challenges. The receivables that you thought were going to come in quicker are delayed, and that leaves you in a cash crunch. So those are typical reasons why people come to us for their financing needs. So I'm a partner. Myself, I'm a partner relationship manager. So I'm on the partnership team here. Everyone that comes to us that applies for the actual financing, they actually work with a representative from our business finance advisor team. Most of them have been here, are tenured, have been here a while, so they know our products very well. So National Business Capital excels in helping entrepreneurs access financing they need to grow their business. Like I said, over 27,000, or that was really over 30,000 in transactions, $30 billion in financing. If you look us up on Trustpilot, on Google, I think you'll be happy with what you see. We mostly have 5 or close to 5-star rating. And I think it's because of our employees. Like I said, we have a lot of long-term employees here. And then also our CEO, Joe Camerato, has really invested very heavily, not just in people, but also technology. When you work with us, I think you'll find the process, especially if you had previously applied with your bank, I think you'll find our process a lot quicker and a lot smoother. So funding on offense, stack capital before it's urgent. Definitely better to apply for financing when you kind of don't need it. When it's too late and you're desperate for it, that's not good. Expand while others wait. And Ramona had touched on this. Especially with the economy, everything going on in the world, it's definitely better to be well capitalized. We find that the businesses that are well capitalized ahead of the curve are the ones that usually come out ahead. And like I mentioned before, buy inventory or assets at discounts, automate to scale margins, finance acquisitions creatively. So, there's really a lot that you can do with the financing. So I'm going to go through a few slides. So really what National Business Capital is we're really an alternative to bank financing. So most businesses or business owners will go to their bank first. Nowadays it's very difficult to get bank financing. They've really gone more upstream. They want to focus on deal sizes 20, 50 million plus. So it kind of has left a void for the small, medium-sized business owner, and that's really where we come in. Our guideline, because we're really built more for speed, and our guidelines are a lot more flexible than a bank. We can also, just so you know, if you have bank financing in place, but they won't extend you any additional credit, we do have programs, and I'm going to get to this in a little bit, but I'm just going to go through our products right now. But just so you know, we can lend behind your bank. So we can provide additional liquidity. Right now, what I'm going to do is I'm really going to go through our waterfall of products because once you go outside your bank, it really becomes a challenge to find, this company does this lender does that. We've really streamlined all that all under one roof, and we offer many different products. So I'll start at the top of what we call our waterfall. Our best product in terms of rates and terms is the SBA loan. So $5 million max per guarantor. We focus more on the 7A. There is an SBA with real estate. We really more focus on the 7A business term loan. It's a 10-year term. Rates right now are anywhere from prime rate right now is 7.5%, plus 1 to 2 3/4. So figure you're going to pay anywhere on a 10-year term, anywhere from 8.5% to close to 10.5%. Approvals can be quick, usually anywhere from 1 to 5 days. Funding usually 4 to 10 weeks. That really varies. I mean, we have funded deals with the SBA in a month, but it could take longer. It could take 2 to 3 months plus. With SBA, it's the longest term with the best rate. So it's very desirable, and you can usually get the highest funding amount through SBA because of the 10-year term. You can get a higher dollar amount compared to some of the other products out there. But again, it's very doc heavy. Doc heavy meaning there's going to be a lot of documents you're going to have to provide. 3 years of business tax returns, 3 years of personal tax returns, 3 years plus year-to-date financials, debt schedule, account receivable, account payable reports. So there's really a lot that plus another application. So it is very document heavy. But then again, it's best rate and term, like I said. And the other thing is also that with SBA, you have to be very specific with the money, right? So they're going to want a complete breakdown of every dollar and where it's going to. Next is our account receivable line of credit. So some people refer to this as a factoring line of credit. So it's collateralizing invoices, receivables to receive financing. It's a line of credit. It fluctuates with your outstanding accounts receivable. So there's really no set term on it. Rates start at prime rate plus 2 points. So right now you're looking at 9.5% roughly in terms of the lowest amount could be. You can finance up to 95% of your current receivable. So that means if you have, let's say, $1 million in account receivable, you could potentially get up to $950,000. It just depends on what that receivables look like. Who is the debtor? Who is who are the clients? Who are the do they pay quickly? Or are they not over 90 days? So again, the account receivable, the AR report will show us that. 7+ days from application to funding. Sometimes it can take a little longer, but this is a very popular financing product for businesses that may not have what's called a first position loan. Usually like a bank loan or an SBA loan. This is more of what you would call like a first position business loan. All right, then we're going into couple of programs that are non-SBA. This is a regular business term loan, up to $10 million. It's a 1 to 2 year term. To be clear, this is non-SBA. We're not tying up any collateral, so you're not putting up real estate or equipment, receivables, IP. You're not collateralizing. We're not collateralizing any assets really. So and we can approve a business for about 10 to 15% of annual gross revenue. There's no prepayment penalties. You can refinance up to 2 loans. So some companies have taken maybe some short-term, high-cost cash advances, and we can up to 2. I would say 2 loans. We can look to refinance those. These report to business credit. Like I said, the verbiage in the funding agreement is a term loan. So there is a personal guarantee. It's really it's really more of like a light personal guarantee. So yeah, that's our term loan product. And these can get wrapped up in a matter of days.
Bradley, the reporting to the business credit bureau, is at the business level or the personal level?
Business. Yeah. So it's a good question. So our financing actually doesn't report to personal.
Okay.
So so the term loan can help build, can report to business credit.
Very good.
Next is our line of credit. Again, it's non-collateralized. This is a revolving line of credit. Max goes up to 750,000. So these are, again, based off of revenue and cash flow. Again, we can approve, again, same thing with, similar to the term loan. It's we can approve about 10 to 15% of annual gross revenue, can potentially fund the same day. You only pay on what you use. So if you get approved for, let's say, 100,000, you can take the full 100,000, or you could take you can start with less. You can start with 30 or 40, 50, and then you have additional funds to draw on. Every time you make payments, the money does get replenished. So you do have access to capital. Line of credit is very popular, especially for best use, I would say, is really for, like we fund a lot of construction companies, that may need it for, they're waiting on, and this can go for any business. You have receivables coming in, they're slow in payment, and it's left you in a cash crunch, or maybe you've spent a little more money than whatever the reason is, you find yourself in a little bit of a cash crunch. You just need some short-term capital that you can just pay back very quickly. This line of credit really fits in well with that need. Terms can go out to 24 months. Again, true revolver. Each payment frees up additional available funds.
Bradley, I have a question. What's the major difference or the advantage of either the line of credit, this business line of credit, or the AR line of credit?
It's a good question. So this line of credit is based off of more revenue and cash flow of the business. So there are businesses out there that may not have AR. They are maybe it's a restaurant or a retail. It's more of a point of sale kind of business. So if they don't have receivable, or maybe they have very light receivables, then they wouldn't qualify. Those businesses wouldn't qualify for an account receivable line of credit. The account receivable line of credit, you're going to get better rates on those. But this line of credit is definitely good for businesses that can't get account receivable financing. Like I said, because they're maybe more of a point of sale business. Also, with account receivable line of credit, a lot of lenders, they're specific in terms of again, with industry, they don't like a lot of them don't like construction. They actually don't. A lot of them don't like medical. They don't like construction because it's third party billing. They don't like medical because then they have to collect the money from insurance companies, which is a headache. So it's the account receivable line of credit is, again, what is your account receivable? Do you have account receivable? What does that look like, and what industry are you in? So it's pretty niche, whereas the business line of credit is going more off of revenue and cash flow. It's really more, I feel like it's really more available for almost anybody.
And I always say
more of a mainstream product than account receivable line of credit.
yes. Now let's say every business should have a line of credit. It's really cheap to maintain, and you only pay if you use it. But Bradley, you can chime in and give me your opinion on that.
What was that?
I was saying that I'm always suggesting clients that is a good idea to have a line of credit.
Oh,
it's relatively low cost to maintain. It's very low cost to maintain it, even if you're not using it. And then if you need it to use it, you have it available.
Yeah, exactly what we said before. Better to have it. You better be well capitalized when you don't need it than then when you need it, you go and try to get financing. That's how you're going to get your best rates and terms for sure. But yeah, definitely in business, you never know what can pop up. I mean, it can be anything from a piece of equipment. Let's say we've gotten this so many times. A restaurant calls up, their oven broke. There's a leak in the ceiling, whatever it is. So many unexpected things pop up, and it's good to have that just in case.
Yes, definitely.
Or something becomes available. Maybe it's an opportunity pops up that you didn't have before, and it comes out of nowhere. So business advance, this is also, also known as a merchant cash advance. These have typically in the past have been based off of credit card sales. They're paid back through the credit card sales. But recently, I would say within the last 7 years or so, 5 to 7 years, it's gotten away from that. And again, it's more based off of revenue and cash flow, the entire sales, not just credit card sales. So you don't have to be a credit card business, right? You can be a construction company and get an advance. You can be transportation or whatever it is. You don't have to have credit card sales per se. Again, it's going off of the revenue and cash flow that we see in the bank statements. And these are usually shorter term, 6 to 24 months. Sometimes they can be a little pricey, so again, you want to, going back to what Ramona was saying before, you definitely want to be, put your best foot forward when you go for financing, because you want to get the best rates and terms. So the advance up to $10 million, approved amount based on cash flow. Like I said, same day funding available, 6 to 24 month payments. 6 to 24 month terms. The payments are made either daily, Monday through Friday, weekly, or monthly. Early payoff discounts are available. That's one way we can decrease the cost. Another thing I want to point out in terms of like what's the difference between like an advance and a term loan. A term loan, again, the funding agreement is written more as actual term loan with a personal guarantee. The advance a lot of times does not have a personal guarantee. It's written as the agreement is written as a purchase of future receivables. Hope I'm not going into too much detail, but really the long and the short of it is the funding agreement on an advance is a little less risky from a client perspective than the term loan. Not much, but slightly. So those are really but very similar, but a little different. Oh, that makes sense.
Yes, no, it makes sense to me. But I think it would be, I don't know if you already covered this, but like if you, the best, you went from the best option to the least best option or less favorable?
I would say it's a good question. I went from, I would say, lowest rate to highest rate.
Okay, lowest rate to highest rate. Okay,
but yeah, obviously nobody wants to pay a higher rate. I understand that. But as you go, I guess, from lower rate to higher rate, right? It's really based on, it's risk, right? So when an underwriter is underwriting a file, right? They look at the cash flow, the bank statements, credit, if they're looking at financials, tax returns, they're assessing risk, right? So that's really all it is. It's really just really at the end of the day, it's really almost like an assessment of risk that they're taking for your business. So obviously we want to put your best foot forward and get you the best rate. But as you get higher in rate, the guidelines are more flexible. So there may be businesses that they can't get an SBA loan now. Maybe they can't get a term loan. They start with an advance and then they wind up getting a term loan later, or maybe in a year from now, they get an SBA loan.
And it's important to know that not having access to any capital is the worst case scenario, right? So having access to capital, even if it's a little more expensive than what we ideally would get, it's better than not having access to anything. And I have seen situations where companies cannot qualify for any of these options. So the fact that we have options, even when the business is not at its best, it's always better than not having any.
Absolutely. And we also have equipment financing. So if there's a specific piece of equipment, whether it's a piece of construction equipment, it could be yellow iron. It could also be a truck. It could be a cement truck, a dump truck, medical equipment, restaurant equipment. Those can be collateralized and and you can finance that. The slide says 5 million max fund. We've actually rolled out some new programs. We actually can go higher than this. We can actually go over 50 million for equipment financing. 1 to 5 year terms. These are monthly payments. Rates start as low as 7%. 100% financing is available. There could be time now. You might have to put a down payment. Again, depending on what underwriting comes back with. 100 financing it could be available. Purchase and lease options, vendor and private sales. So whether it's from a third, someone they own a business, they're just selling it privately, or if it's an actual vendor, we can look at both.
And let me remind you that you are financing a piece of equipment, you can take advantage of accelerated depreciation. So that helps you with your taxes.
Section 179. Yep.
Yes, yes.
Absolutely.
We love to see those purchases before the end of the year. If you need equipment, talk to Bradley to finance.
Yeah. Trump just changed that again. Right now it's 100% depreciation the first year.
Yes, yes, there are a lot of good things in that beautiful bill. We'll have webinars on that too. But yes, there's a lot of opportunities there. Originally, we thought that was going away or being reduced, the accelerated depreciation and the bonus depreciation. Those are back, and that's presenting a great opportunity for purchases of new equipment and financing it. You don't have to buy it in cash. Financing it qualifies the equipment for that accelerated depreciation. All right, thank you, Bradley. So the Loan Ready plus NBC, this is the journey. We are partnering with NBC to support you, to help you get access to this alternative financing. As you saw, you have a lot of options. It's not just, they don't force you into one. If you qualify for the best, they're going to get you the best. And I had the opportunity to work with them to support a few of our clients, so I can speak about this process. We will help you in this process. FiBrick and the team will help you with understanding where you are, where the business is, what's the story that you are ready to tell the lenders, what is the positive and what you can change before you are desperate for this financing. And I know that NBC's team, they're almost consultants in this process. They are consultants in the process. They will talk to you and help you figure out what is the best product for you and how to get ready to qualify for one option or the other. We will connect you with NBC. We have a link where you can start that process, that application process that's going to send you directly to their portal. And it's a very easy process to provide information, the documents that they need. They're very hands-on. They'll call you, they'll guide you to the process. And so are we. We're here to help you with the process if we're partnering on this. And once you start the application process, Bradley can tell you about the underwriting and term sheet and funding steps. Go ahead, Bradley.
Yep. And thank you, Kirsten, for putting in the link. If you want to apply, there's a link that Kirsten just put up. You can click on that and fill out our digital application. So when we receive the documentation that we need, we usually do kind of a soft or a pre-underwrite, because essentially we're matching you with lenders that are going to that are a fit for, that we think that are going to give you the best rates and terms, that are going to approve your business based off of the criteria and product that's going to fit and match your needs, right? So we do like a soft underwriting, and we review all of your documents. We match them in our system using technology. Usually it takes us about a day or two. And then the business finance advisor that you're working with, they'll present those options to you. They'll lay it all out, make sure that you understand it, what the rates are, the total highest funding amount available for you, terms, rates. And they usually do give you multiple options, like Ramona said. We may present you with a term loan and an advance. We may present you with a line of credit and an advance, or equipment finance and a line of credit, right? So we like to give options, and a lot of cases we do combination deals. We may give a equipment finance and a line of credit or something like that. But basically, so that's the term sheet, right? So a term sheet is us presenting you the options, and then if you want to move forward on those, there's some additional documentations we may require. There's a funding agreement, and again, the business finance advisor will tell you what the funding process will be, and then ultimately the funds will be in your account, either ACH or wire.
Bradley, I'd like come up before, but do you also have financing for acquisitions of businesses?
Acquisition, good question. So it depends on the scenario. When it comes to acquisitions, if a business is acquiring another business, in some cases, yes, we can do that. If we can leverage the existing business. A lot of times, we're not going to be able to provide the. Sometimes we are, but a lot of times we're not able to provide the full financing amount. Like usually, so for example, if let's say there's an acquisition of $1 million. A lot of cases there's we may be able to provide some of it and be more of like a junior debt provider to another lender that does that. So we're really more we really focus more on businesses that are looking for working capital to scale and grow, and we might be like a down payment, but in terms of a full acquisition, I would say it depends on the scenario.
Very good.
Yep.
Let me see what we have next. Okay, so here is, and we'll go to some examples shortly, Bradley, but thank you, Bradley, for all that information. This is our giveaway for today. I want to put it here so you can start downloading it or checking out the resources. We have a loan readiness scorecard. This is a tool that will allow you to assess where your business is today, how ready it is for a loan application for access to capital. And once you go through that process of assessing your business into these 5 areas that we have put together, you are able to book a 20-minute review with me to go over the results, and we will give you some actionable steps for how to move your business towards loan readiness. And of course, we'll have the team at NBC helping us through that process. We'll connect you with them. You can apply on that link that Kirsten put in the chat, and together in NBC with us and giving you the guidance to get loan ready. If you're not loan ready today, you're going to get loan ready in a few months. We can help you get there, and if it's not possible, you'll know exactly why. So download the guide, and in the meantime, we'll send these slides. Actually, we'll send you the link to the slides so that you can, if you don't have time to download this today, you'll be able to do it later. And I think, Kirsten, you can put the link in the chat too, in case it's easier for them to click on it. And in the meantime, Bradley, you have some real life examples that you want to share with us. So I will let you share your screen.
Okay, great. So yeah, I'll run through a couple of client success stories. So we recently funded a retail business, $275,000. Use of the financing was for inventory. Type of financing was a revolving line of credit. So client operates a sneaker and apparel business with one physical location. They had some cash flow challenges, inventory orders left them with little liquidity. So they were looking for capital, preserve cash flow, and increase the size of inventory orders. The funding that we provided them enabled larger inventory orders and helped them preserve their cash flow. They're expected 2.5 times boost their monthly revenue. Application to funding 3 days. 275,000 revolving line of credit, and then I'll share one more. $250,000 funding, farming and agriculture, use of financing expansion, type of financing, term loan, 15 months. Client owns a dairy farm for 50 years, offers dairy cow leasing plus operational and financial consulting for other dairy farms. They needed funds to cover higher operating costs from taking on new clients. They're also looking to expand production capacity with new equipment. This new investment project a $750,000 boost in 2025's annual revenue. Client can continue upward momentum after decades of serving their local community, and application to funding on this one was 3 days.
Very good. Thank you, Bradley. And what is the lowest loan that you make available for your client, the smallest one?
Mm-hmm. Yeah, so typically we'd like to stay above 30,000. Now, but being transparent, if you get approved for a line of credit. A lot of line of credit, I'm not saying all, but a lot of line of credit programs, you get a portal. And with your portal, you can access really any dollar amount that you want. But ideally, I would say we want to stay above 30,000.
Okay, very good. Now let's go through. I saw some questions in the chat, and let me see. And some of them may have been answered. So, Jason, you were asking if NBC also provide lines of credits or just loans. And I think Bradley, that's what you confirmed, right?
Yep.
And
yeah, that's what we do lines of credit. Yep.
And then, and the business can have both a line of credit and a traditional loan, on a loan outstanding, right?
Yes.
Okay, so you don't have to do one or the other. You can have both. And then the other question was, do you have staff that helps you with the that helps businesses or applicants with the paperwork process?
Absolutely. Yes, our business. You'll work with a business finance advisor. Typically, we like to have a discovery call, learn more about your business, what you're using the money for, the opportunity, those kinds of things. And then the paperwork, they'll let you know exactly what we need. If anything's missing, they'll let you know. And then sometimes during underwriting, underwriting may ask for an additional document or two. So they'll communicate with you and let you know with that. So to answer your question, yes.
Yes, and
we walk you through the whole thing, start to finish.
Exactly. And where we help, where we come in is for our clients, we are helping them prepare those financials. Either they're already prepared because we manage their monthly bookkeeping, and it's a matter of just uploading them to the portal, which we can do on your behalf. And also with the tax returns, almost every lender, I haven't had a single application where the lender didn't ask for the tax returns for the last 2 years. So if we are the tax advisors for these applicants, we go in and we upload the tax returns on their behalf with the approval of the client. Of course, we don't upload anything that you have not reviewed and signed up on. And if the lender asks or NBC asks for accounts receivables, accounts payable, the debt schedule, if you have other loans and they want to see the amortization schedules for those loans, we are able to prepare those quickly for our clients when they are our existing clients. If you come in as a new client and you don't have these documents or reports ready, we help you get them ready, prepare them from scratch. It takes a little longer. It takes it might be more costly than if you have done monthly bookkeeping, but it's doable, and we can definitely support you with that. And then from there, NBC takes care of everything else. If you have any other questions, please put them in the chat. We are about to wrap up. This has been an amazing session for me. I have learned a lot. Bradley, I think I'm ready to take my next loan. So it has been very insightful, and I hope our listeners have taken away some good actionable steps, are ready to get an assessment for where they are in terms of the loan readiness stage, and also take the opportunity to apply for funding through NBC, because there is no commitment. They're going to tell you what you qualify for, what you have access to, the different terms that you might get. And it's always good to start now before you actually need the funding. We're always going to say that, regardless of what stage of business you are. And we also have some other links here for you to follow us, where you can follow us. We recently launched our YouTube channel, which is going to be focusing on loan readiness. And we're going to have a weekly video where we share tips and resources and stories of this journey of being fundable and loan ready. Because without money, we cannot survive, right? So either, if your business can be self-sufficient, but even so, in order to expand and to grow, to scale, you a lot of times as a business will need access to capital. And we want to make sure that you have it not when you need it, but before that. Bradley, do you have any final words that you want to share? Anything else that we left out?
I was going to say, if anybody has any additional, if you think about a question later on, feel free to, I'm still happy to answer them. So, Ramona, if you want to loop me in or however you want to do that, that's absolutely fine with me.
I'll be happy to. Yes. If you have any questions, you can send them on any of our social media pages or via our contact form on our website. But also, I'm happy to make introductions to Bradley via email. So just reach out to me and I can connect you with him. And he will schedule some time and give you a free consultation. So everything is free. Everything is free up to the time that you have to pay for the interest, right? And happy to have you here. Look out for the next event. Please send us your comments if you want to see more or different content. And I look forward to seeing some of you around. Connect with us. Follow us on social media. Send me an email and send me a message. We respond to all the messages, and it was a pleasure to be here. Thank you, Bradley. I look forward to collaborating again in the future.
Thank you, Ramona.